Mahesh Patil now joins us. Mahesh, thank you so much for taking out time for us. Can we first start with what do you think will be the trends for 2022 and then we can take it forward from there?
Yeah, good morning. So 2022 again is a period of kind of a transition, okay, where we are seeing the high liquidity which was there, okay, that will start to ease off. Interest rates will start to go up. So it's going to be a bit different than what we had last year. But at the same time, we are seeing, at least in India, the corporate earnings growth is likely to really improve because last year, India was still lagging behind in terms of recovery. And so while we are expecting that the earnings growth would be over the next 3 years could be around in the mid-teens. Again, driven by across various sectors. The domestic sectors are ones which will do well. Domestic cyclicals, including the banking sector, the manufacturing, industrial, real estate, all will contribute. And there'll be some normalization of the P multiples, which are a tad higher than the long-term averages. So the overall returns probably will be slightly lower than the earnings growth is what one should expect. But I think we are at the beginning of a new cycle, at least economic cycle. We are fairly positive in terms of overall India's GDP growth, which we expect not immediately next year, but over the next 2 to 3 years should normalize back to the trend line growth rate of around 6.5%. And that would be one of the largest, highest growth what you will see in a lot of the other large economies. And that will be predicated on multiple sectors firing, multiple legs firing. One is the whole investment cycle. We expect that to pick up slowly and steadily over the next 2 to 3 years, which was kind of going down over the last 5 years. That's likely to do well. Exports have been doing well on the back of strong global growth. I think that should continue. And the whole China plus one policy should only help that. And the various measures taken by the government with the PLI scheme should support that. So all in all, I think for long-term investors, I think the market still looks good. We still see a decent risk reward in equities. Shorter term, there could be some volatility as we get into the next calendar year because of what's happening globally in terms of tapering, increase in interest rates, high inflation. But again, this should be transitory and market should start to, is already starting adjusting to that.
Mentioned about investment related sector. Yesterday we spoke to Prashant Jain as well, and he said that economy, investment, banks related sector would tend to do well. So can you just tell us that these domestic sectors, domestic capex story, they have not done well for 10-12 years. People have forgotten them. So what are the things to watch out for? How should you identify companies within these sectors now?
So on the investment side, it's not going to be across the board. Probably it will be more selective. Especially in sectors like metals is where we are seeing companies starting to announce new greenfield capex or brownfield capex. Other sectors like textile, auto components, electronics, consumer durables are the sectors, okay, where you will see investments pick up. Obviously, the chemical sector is another sector. And there's a lot of automation, I think, which is going to happen. So a lot of the new capacities which are going to come up are going to be much different than what they used to be around 10 years back. This will be more automated, more intelligent, embedded into it. And companies which are on the industrial side, capital goods side, which are really on the forefront of that, should be able to take a larger market share over there. So I think it is going to be a fairly reasonable pickup, though I think it's still too early because the capacity utilization levels are still fairly low. We need to see the demand pickup, which we expect to probably happen in the next second half of next calendar year. And then I think you will see the whole capex start to improve. Also, a lot of companies' balance sheets, companies have delevered significantly in the last 3 to 4 years. And the corporate balance sheet is in very good shape to further lever up and to do the incremental capex as they see the demand slowly starting to pick up.
Mahesh, what one has seen in 2021 was really 60 listings, right? And some of the new age businesses finally made their foray to D Street. Everything from a Nykaa to a Zomato, PB Fintech, Paytm, Cartrade. But the interesting thing is that not many of them were successful listings. Of course, there was an ICA, but at the same time, there was a Paytm as well. And when I talk about the gains versus issue price, I mean, Aparis Defense, MTAR Technologies, Nureka Limited, they all were successful ones, but they were also the ones which have seen a good 35% decline from the issue price. Case in point being a Cartrade, Paytm, Fino Payment, Suryoday Small Finance Bank. Wanted to understand what is it that you made of this IPO frenzy and whether or not, while this froth has already begun easing, do you sense some more sanity is going to return to this space in the new year?
So there's no doubt that the IPO market was very hot this calendar year. And we saw a lot of new issue listings. There's a lot of retail participation which was there. A lot of these new age technology companies have got also listed, which are kind of new to the market. Market is still trying to grapple in terms of how to value these companies. And that's why we've seen a lot of volatility in some of these new age technology companies. The secondary market, the private market was where most of these stocks were getting valued. So I think investors and the market is getting now tuned to adjust, what the right valuation is. And there is a learning curve which will play out. But I think overall, I would say that the euphoria, what we saw last year, will probably ease off. I think investors will be slightly more discerning in terms of where they participate, because we have seen hits and misses both lately in the last 3 months. I mean, around 9 months back or 1 year back, most of the stocks IPOs did well. So, and the fact that overall liquidity situation is also going to slightly come down, you would see market more discerning, and companies which have got very steady kind of or business model or reasonable earnings and reasonable valuations would only, I think, market will look at it. Obviously, there will be the new age technology companies which will continue to come in, and investors will still look at it, because that's a space where the kind of long-term growth potential is fairly large. And investors would still want to have some slice of that piece also. But my guess would be it would be a more discerning market on the IPO side in this next calendar year.
Sure. Mahesh, where is it that, going forward, are spaces where you feel that they're richly valued and they will not see the same performance as 2021? What I'm trying to understand is what's on the sell and avoid list from you.
So broadly, if you look at the market, still there is divergence which is there, but it's not just because the sector is richly valued, that will drive its performance. We've seen sectors which are expensive or richly valued, like for example, the chemical sector, for example, or the industrial capital goods sector. I think the outlook for that is still fairly good long term, and they will continue to remain expensive. So I think it is more important to focus on the long-term growth potential expectations for the sector to really decide on where you want to be overweight or underweight. So broader themes which we like over the next 2 to 3 years are: one, banking and financials. We see a good growth recovery going into the next couple of years. Again, credit growth has been weak, but that will pick up. Overall credit costs will be lower. And the sector also is fairly, its valuations of a lot of the larger banks are somewhere closer to the long-term averages. So that sector looks fairly good in terms of the risk reward and the earnings growth potential. Apart from that, others, as I mentioned, the industrial sectors, again, looks good on the back of the improvement in the capex cycle. Real estate is another sector which is starting to move up, and we've seen after 6-7 months of downturn, the sector has finally come up, driven by low interest rates, and that should continue. So industries which are related directly or indirectly to the real estate sector, whether it is home improvement, consumer durables, should see a fairly strong growth outlook. So that's another space, where we would be positive. And finally, I would say the whole digital I think India has seen the whole digital adoption gathering pace, not only India but globally also, and we see the IT sector benefit out of that. But a lot of digital enablers, companies which are enabling digital transition, are the new age companies which will also create immense wealth. So these are some of the broad themes which we think will do well going forward. And avoids, basically there is not much okay in terms of avoids, but sectors like the oil and gas sector, for example, looks there is nothing much. It's a cheap sector. It's still relatively cheap, but we don't see any enough earnings driver from a longer term perspective over there.
Wanted to understand, purely from the point that you were just making, the focus on digital. We understand that technology is getting democratized. You're seeing a lot of new digital players out there, be it banking, B2B, B2C, or for that matter, even EdTech, which is fast emerging as a theme. But when it comes to pure play IT services, Mahesh, would you say that easy gains are behind us, while few of them may still see re-rating in times to come, but that easy money and the low-hanging fruit is definitely a thing of the past?
Yeah, I think there's no doubt that the IT sector, which has seen a huge amount of re-rating in the last 2 years or 1.5 years, I think that is behind us. We don't see that further getting re-rated, because I think the earnings surprise and the earnings upgrade cycle, what we saw in the IT sector, is probably behind us, though I think the IT sector will still continue to do well. That's a sector which offers still a good amount of visibility in terms of growth, and margin pressure, other issues which were being talked about are still fairly manageable. And there should be still some tailwind. I mean, last year, rupee was fairly flattish kind of a thing. Next year, we expect some depreciation of rupee on the back of dollar being slightly stronger, and that should add a bit in terms of the growth outlook for the IT sector. So overall, it's a steady sector with steady growth and with moderate returns, but good visibility, I would say.
This reopen theme. So that's of course been one of the key themes that the market has been following. But with this flip flop of COVID cases increasing, what is the sense that you get? It's getting difficult to take a long term call on some of these names.
No, I think what we see now is for India, it's the third wave, and the Omicron, which is kind of spreading very fast. I think you will see that kind of in the month of Jan end or somewhere in early Feb, it will start to peak out. But I think one fact is there that it's not as the fatality rates are much lower, and hospitalization rates are also much lower. So while we will see some amount of clamp down which will come in, but don't expect a large scale lockdown. So the retail and some of the open up trade or the multiplexes will get impacted in the short term. But I think what we are reaching a phase is where in India, at least, the herd immunity is coming very fast paced, and especially after the third wave, you will see that. And I think then hopefully things would again be back to normal. And to that extent, I think the whole retail sector again we like this sector from a long-term perspective. I think it's a classical sector where you will see penetration levels increasing, the move from unorganized to organized play out over the next many years, and that will drive the growth of some of the retail companies which are having good brand and distribution franchise. So I think it's a good time to look at some of these open up trade if they have correct in this phase, right, where we see some concerns because of the third wave play out. Because I'm pretty sure that latter part of next year, you should see these sectors coming back pretty strongly.
Right. Thanks so much, Mahesh, for taking out time for us. Always good. to get perspective from you. That was Mahesh Patil talking about various sectors, themes for 2022. Let's go.